The broadcast is now starting. All attendees are in listen-only mode.
Hi, everyone. This is Kathy McBreen of the Spectrum Group. Welcome to our June webinar about our investor index. And today we're going to be talking about the buying behaviors of wealthy investors by occupation. I know it sounds snoozy, but it's actually very interesting because it's one of the biggest criteria that we see that differentiate different types of investors is their occupation and their habits based upon their occupation. So I'm excited to introduce you to Eric McDonald, who will be doing that later on.
Hi, this is Eric McDonald. I'm a consultant with Spectrum Group.
Great. Okay, so I want to talk first about our Investor Confidence Index. I want to mention that if you have any questions at any time during this webinar, just type them in and we will do our best to answer them. Okay. So let's talk a little bit about our Millionaire Investor Confidence Index today. And this is fascinating. This has just been one of the most interesting months that we've had in almost the whole history of the index. And the reason that I say that is because the millionaires are generally better predictors of what investors are thinking or feeling and what could happen in the market than affluent investors, those who have 500,000 to $1 million. The millionaires have more than $1 million, obviously, in investable assets. Generally, and throughout the time frame of the index, and we've been doing it since 2004, the millionaires almost always trend above the affluent households. And this time they are not. And this time we've had the largest drop in millionaire confidence that we've ever seen in the history of our index. It dropped 17 points from last month. And compared to May of last year, we're also down 2 points from that. The highest it's ever been is 25, which was in March and April of 2004, so way back. But this month it dropped down to a 3. And in contrast, the affluent investor confidence index also dropped down, but it was still at a relatively normal 4, which they're generally lower than the millionaires, as I've mentioned before. So that's fascinating information. So we're going to want to talk a little bit about why this happened. So as you can see, here's the indexes throughout the years. The bottom portion shows sort of the roller coaster since we started doing this in 2004. You can see the big drop in 2008 and 2009. And then up above it, you can see what's happening in the last 12 months. And as I mentioned, always you can see the blue line above is the millionaires as opposed to the affluent households, which are $500,000 to $1 million of investable assets. The millionaires are $1 million and above in investable assets. So one of the important components is the investor household outlook for the index. And as you can see, these are combined numbers of both affluent and millionaires, so they should have been labeled that way, I guess. But overall, the household outlook, so how people are feeling about their own household, is actually not that bad. You can see in May, it was 24.4. So this month is not really all that bad. So what happens? You can see down there a 10.8 in October, so that was right before the election. Everybody was nervous. But this month, a 24.4 at the end of the month was where they were scoring, which is relatively high. People have been feeling pretty optimistic about the markets and everything since the election. This household outlook is made up of different components. So you can see the household outlook in the top chart here, and then the components that make up the household outlook are down below. So this is also interesting. Household income is not that bad. In fact, it was actually up, people feeling good about their income. Overall, about the economy, they were feeling a little more nervous a little more nervous than before, but compared to last year, they're still above that. Same company health was down, but compared to last year, it's still up. Household assets, with what the stock market's been doing, which has been fabulous for the most part, there was a little bit of hesitation. People were a little down, a little bit more about the from last month, but they're still up compared to a year ago. So why was the overall index? All of these factors and a few others are weighted in coming up with our total calculation. And one of them is the types of things that they're going to invest in, which we're going to discuss a little bit in a minute. But one of the biggest factors is how are they feeling about some of the stories that are impacting them in the news? And as you can see, the political environment is the biggest news item that's impacting them. And it's even higher for the millionaires than for the affluent. So we dug down into that a little bit. And you know what we found? It was just fascinating. We stopped cutting the data after the election for the most part and sharing it between Democrats and Republicans. But the biggest drop was obviously in all the millionaires, but it was in the millionaire Republicans who were the most disappointed and had the biggest drop in their overall attitudes towards the economy, towards all of these different things. So when we segmented the information and looked at Democrats and Republicans, it's the Republican millionaires who are really upset about the political environment. And part of this is because in the qualitative research that we do, we hear comments like, they've got everything they want and they still can't get their act together and get things done. They're tired of the news media. They're tired of all of the things that are going on in Washington, which they feel is impeding some of the things that they think are holding up the stock market, which are, not surprisingly, the tax cuts that they're all looking for, which are very important to many of them, as well as the whole healthcare issue, which many of them see as a huge issue. So at this time in history, the markets are impacting people, but not as much as the political environment and the feeling that these people have that it will impact the markets and everything else related to it. Here you can see where now, even though they're upset about the political environment now, it's not as much as they were upset about the political environment in December of 2017, which was 26 December. We have those mislabeled. They should have said 16, I guess, as they were in December right after the election. So you can see it was the worst then, but it hasn't gotten that much better. We asked people how they're going to invest, and this is one of those interesting things that I can tell you when we did look at it by political affiliation, or we look at it by gender. These things don't really change that much based upon different segments. So overall, investors think pretty much comprehensively the same. You can see stocks a little bit down, bonds a little bit up, cash. People are holding onto cash. That's one of the places where I can tell you, obviously, there's a big difference. Democrats are holding onto cash much more than Republicans, but Republicans are holding on more to cash than they were a month ago. Stock mutual funds a little bit down, bond mutual funds a little bit down, and real estate still lower than it was back at this time last year, basically. So that's sort of the overall discussion about our index. And as I said, it's really interesting to see how these investors are feeling and how it's going to impact what they're going to be doing with their assets going forward. You can see if things don't start to get resolved by July or August, I think that we're going to see even bigger changes in their attitudes and maybe some actual changes in their portfolios or their buying behaviors. So I'm going to turn it over now to Eric, and he's going to talk a little bit about millionaires and how they change or how they make decisions differently based upon what type of an occupation they have. Eric?
So the first chart we're going to look at is the types of advisors used to manage their assets at the millionaire level and the occupation level. Among millionaires, full-service brokers are the most common type of advisor used regardless of their occupation. However, when you look at it broken down by occupation, you do see that business owners are much more likely than other occupations to utilize an accountant, an attorney, or a banker. And this is most likely due to all the different facets that come into play when you own your own business. So next we'll go ahead and look at the same sort of data except by the ultra high net worth. Again, full service brokers are the most common type. So pretty much for all millionaires, they're the ones that are used most for managing assets. Senior corporate executives on this page, as you can see, are more likely than the other occupations to use an attorney or investment manager. This next slide looks at the investment risk tolerance, so it's broken down by those who are most aggressive, moderate, or conservative. The blue is conservative, the red is the most aggressive. Educators are the most likely profession among millionaires to rate their risk tolerance as most aggressive. However, they also have the largest percentage that rate themselves as conservative. My guess is, looking at the data even further, that the younger educators are a little more aggressive than their older counterparts. Among the ultra high net worth, business owners are the most likely to rate themselves as having an aggressive risk tolerance.
One of the things I thought we might mention is that one of the reasons that educators are among one of the top millionaire categories is because one of the things that is taken into consideration when you're looking at overall net worth of a household is the value of any defined benefit program that they may have. Additionally, so a lot of teachers have a defined benefit program that a lot of other people don't have. And additionally, a lot of educator households are two-income households. So that sort of bumps them into the millionaire category quite frequently.
So the national concerns for millionaires, the political environment, as you heard from the previous section on the index, is the largest national concern, regardless of kind of the occupation. That, along with cyber attacks and computer hacking. When you look at it by occupation, millionaire educators report the most concern with the administration and relationships with Russia and China. For the ultra high net worth, again, you can see the national debt, political environment, cyber attacks, and computer hacking. Those are all, again, kind of the top concerns for ultra high net worth, regardless of occupation. When it gets broken down by occupation, the senior corporate executives are the most concerned about the increasing interest rates, the tax increases, and inflation than other occupations. And business owners are the least concerned with the government gridlock. The personal concerns, ultra high net worth managers, they're much more concerned with the financial situation of their children and grandchildren and having someone to care for them in their old age than other occupations. Millionaire educators are more likely to show concern in all areas than their counterparts in other occupations. For the largest percentage of millionaire portfolios is comprised of investable assets. This is also true regardless of occupation. Educators are less likely to have defined contribution accounts, but that's because the type of retirement accounts are available to them are not most likely DC, but more likely to have insurance and annuities and investment real estate than other occupations. The largest percentage of ultra high net worth portfolios, again, is comprised of investable assets. Business owners are twice as likely to have investment real estate than other occupations, but generally have a smaller percentage in investable assets. So when it comes to selecting investments, millionaire educators, they're much more likely to be concerned about the social responsibility of investments. They're almost at 50%, so nearly half of them. The rest of the occupations are all 30% or lower that look at that when they're selecting their investments. The ultra high net worth professionals show a higher level of concern for the reputation of the company where the investments are made. Again, they're almost double the amount than senior corporate executives and business owners.
Thank you, Eric. Thank you all for participating today. I wanted to mention that all of this information can be found in our High Net Worth Insights newsletter, or actually we will be sending a copy of this study or this PowerPoint deck to you after the webinar is finished, but you can obtain our High Net Worth Insights newsletter. It always contains all of the information about our index, and I'd like to point out inside of the High Net Worth Insights newsletters, we take all of our information and we provide it to you on a monthly basis in interesting and hopefully educational articles. What you see in front of you are the articles for this month: the tax plans of the affluent investors one, how our political situations impacting the markets, the surprising ways wealth influences investing, feeling ill over healthcare costs, and down a really in-depth article about how educators are viewing financial advisors and how they make selections. So do we have any questions? Great, I don't see any right now. I hope everyone has a good month, and we will talk to you next month with a new update on our index. Thank you so much for attending.